190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. And also, just before we started today, I just wanted to quickly let you know that our platform here at Daily Market Movements is offering a 25% deposit bonus. This is a limited time offer. I'm going to leave the website for you to create a trading account with our platform in the description of today's video, along with the links for the App Store and the Google Play Store, so that you can go and download our trading platform on either store. But let's get started with today's video now. Of course, yesterday we had an explosive move towards the upside, and unfortunately I got a lot of hate really yesterday on my YouTube channel. A lot of people, throwing it back in my face, saying, "Oh, Max, you was hoping for the market to go down, this, that, this." And sure, you could argue that I got it wrong yesterday, but you can also argue that Jerome Powell was very dovish yesterday, a lot dovish. I think it took a lot of people by surprise. He basically come out and said that the Fed can now start to slower future interest rate hikes. And of course, this was always going to happen, but I didn't see it coming this fast. I thought, maybe that would have been in the chat from September onwards, not this soon. But anyway, he's come out, he said it. He's also said other key factors, like, for example, the US is not currently in a recession, and the market cheered it, and rightly so. The Fed coming out like that, becoming as dovish as he was, the market should be up, and the market was. The Nasdaq100 was up 4%, a great rally and a great success for the bulls. But no fundamentals have actually changed in the US economy. And when I say that, at this moment in time, the economy is still incredibly fragile. And we've just seen it today. We've had the GDP data out. And for the second quarter in a row, we have seen a decline in the GDP, gross domestic product. We have seen the GDP this quarter minus 0.9% versus 0.3%. So that's a huge difference. In fact, the economy is now slowing at a much more aggressive pace than most investors feared. And I don't think that the market should be trading in the green during today's trading session. We were just initially minus 1% and we've just clawed back those gains. But, we are treading on a very, very thin rope at this moment in time. And of course, later on, we hear from Apple, which has had a huge run up going into their quarterly earnings. So even if Apple misses ever so slightly, and I think that their quarter is going to be good, but it's their guidance which I'm more interested about. But if they do not hit on all cylinders, then of course that stock could be in for a big pullback, perhaps 5 to 10%, and of course that would have a massive negative impact on the overall market. As well as Apple, we hear from Amazon as well, and of course we've already seen signs from other companies similar to Amazon's business model. They've come out and said that the consumer is starting to weaken, so Amazon could be a disappointment as well. So of course it'll be very interesting to see what these two companies have to say after the closing bell. But again, I just want to come away from this video and let people know that I don't want to come onto YouTube and be the Mr. Negative, trying to sound all doomy and gloomy, because a lot of my long-term viewers here on YouTube would back me up here and say that Max used to be a very big bull, and I still am bullish on the stock market. There's going to be a fantastic buying opportunity within the next 3 to 6 months, but I don't think this is it. I think that you could get an extra 10% towards the downside and end up back in near these lows. I kind of see myself right now as being the cold glass of water that's about to get thrown on retail investors' faces when they realize how fragile the economy is. And it just comes back to this, guys. Right now, we're still in the summer months. It's 30 degrees outside in most countries. Energy bills aren't expensive yet, and still people are struggling. Still, the consumer's starting to become stretched. Now, imagine that with Christmas coming up very, very shortly, after next month, which of course is August, all of a sudden you'll start to see Christmas cards and Christmas presents in shop windows. Okay, and as well as that, we're going to be having to pay extortionate prices just to heat our homes. And I think, on the majority of countries' populations, it's going to be incredibly difficult to navigate through this winter. And I think that, the economy will continue at a rapid pace to decline and slow. And I think that's where the real challenge comes. So sure, yesterday, I let the bulls have their day. I don't think you should lose your head on one positive trading session. And I think within the next couple of weeks, we will see all of the gains during yesterday's trading session be lost, and we will continue to be a downside here. So I just see yesterday's rally as yet again another fantastic selling opportunity.
500,000 barrels per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is